We have 2,850 employees. I think of myself as a small business, and I think of us as wicked nimble, and we can turn in days or a week or two on a dime and go in a different direction if we need to. And a part of that's a mindset. I had that mindset when I was running a 16,500 employee company too.
Welcome to SaaS That App, building B2B web applications, the podcast where we share real-world stories, practical advice, and tech insights for those building or thinking about starting a tech-enabled business. I'm your co-host, Aaron Marchbanks.
And I'm Justin Edwards. Each week we bring you the stories, strategies, and insights you need to build your SaaS or tech-enabled business smarter, not harder. Let's dive right in.
Hello, and welcome back to SaaS That App. As always, I am your host, Aaron Marchbanks, and with me as ever in his lovely Dunning-Kruger shirt, Justin Edwards. How are you doing, my friend?
Doing great, Aaron. You want a proof that Facebook advertising works. If you put a stupid shirt on my feed, I will buy it. And here we go. So
nothing wrong with that. The algorithms are pretty good. Also, today we are excited to welcome Joe Walsh, who is chairman and CEO of Thryv. It is a SaaS platform helping small and medium-sized businesses market, sell, and grow their business. Now, Joe has led companies through dramatic transformations and growth, from expanding Yellowbook into a $4 billion global business to turning Thryv from a legacy directory publisher into a cloud-based SaaS platform that is still serving hundreds of thousands of SMBs. So we are excited to get into all the ins and outs of that. Joe, welcome to the pod.
Thank you very much. Glad to be here.
So first question, always the hardest. How in the world did you get here? What was your start? How did you get to where you're at?
That's a good one. My dad was the mailman. My mom was a clerk at the phone company. I'm from a big family, and I wanted to try to figure out how to become successful and be in a position by the time my parents retired to sort of help them have a better life, because they gave everything for us. And it's amazing what you can do when you're doing it for somebody else. You can get thrown out of places, you can knock on more doors, you can make more phone calls, you can do whatever you have to do. And I started young, reading the biographies of great men and women, studying success, really. Companies, countries, sports teams, anything that achieves success, trying to kind of chronicle and understand in my mind, how is it that you become successful? How do you become that kind of 1% kind of thing? And I just worked at it. And, it's amazing what you put in your mind over time starts shaping the way you think, shapes your vocabulary, shapes the way you set goals, the way you think, the way you plan. And starting out as a young guy, I just really figured I would never work for anybody. I would just build my own businesses and figure out how to go do that. And early on, I got, as you sort of mentioned in the intro, into the Yellow Pages business, the glamorous and exciting field of Yellow Pages. Before it was cool. I did it back before it was cool, a long time ago. And the telephone companies had a virtual monopoly on this business. They, by right of the fact that they had your phone service, they had to provide a subscriber list. And so they sold ads alongside of it. And they were pretty much the only provider. And there were some niche publications that offered an alternative, either by a little geography or possibly by some other vertical, but there weren't any real direct Coke and Pepsi competition. And so I set out to do that as a young guy, built a business, sold it on to another business, and stayed within it. We were the publisher of the year after a couple of years. And then I joined this little company in Long Island, New York called Yellowbook, and it was about 20 million in revenue at the time. There were 38 salespeople, less than 200 employees. It was a small company. And with a little luck, took that organization from that size and scale to more than $4 billion globally over the next 24 years. And we did that by first sharpening up the story around what we did, and then creating a replicatable model of how we could begin to scale it. And then we made 77 acquisitions over time. I was pretty good at raising money and doing all that stuff. And so we were launching greenfield into new markets where they hadn't had competition, some 250 new markets over the arc of that time. And then we were making acquisitions and bringing in talent and bringing in more customers and market that way. So here in the US, we grew it to $2 billion in revenue, more than $600 million of EBITDA. We were about 8,000 employees. Then along the way, the financing story is always interesting on these. We used private equity partners to back us, and I would swap out the private equity partner about every 2.5 to 3 years. So they were still excited and new in the process, and I would bring in somebody else and swap them out. So the boundaries were always fresh, and they were always saying yes to whatever I was bringing them. So financing my deals worked out pretty well. But along the way, British Telecom came along, and they said, "We want to buy you." And I said, "Look, I've seen the movie The Patriot, the powdered wigs, all that stuff scare me. Just not sure how it would turn out with you guys. And they said, no, we desperately want to back you. And I said, look, if we could create a structure that was just like private equity, I would do it. So we did. We created this really interesting model where they bought the company, but then created a built-in upside plan. You'll love it. It was called the Super Wealth Incentive Scheme. Very British. So later, when I gave out shares in this, I called it cheese. I'm going to give you some cheese. Bring in the Swiss plan. Going to work out. Anyway, this was amazing because it allowed us to take a whole bunch of money off the table and then still have this big upside. So we went a couple of years with them, and then we went and got Hicks Muse, which was a big private equity firm at the time, and Apex, which is still a big private equity firm, and got them to back us. And we bought ourselves back, plus the Yellow Pages in the UK. And then 2 years later, we took it public on the London Stock Exchange, and it went right into the FTSE 100. It was a £5+ billion business with 16,500 employees, wrapping around the world. And I stayed on for a number of years, eventually left and went out and did my next adventure. But that was how I got started in this.
That's amazing. So, I mean, obviously, tons there. And I know Justin's going to have questions on the financial side because he always does. But keeping that in mind, even before that financial planning, I mean, did you look at this as, here is this legacy thing, this legacy business that we're dealing with? And was there ever thought given to, maybe it just simply needs to end? We need to manage it to decline and start something new? Or was it always no, we can transition this thing and here's how we're going to go about doing it?
Well, that story is so old, it wasn't declining yet. I mean, Yellow Pages was still growing. The problem was that the phone companies had a monopoly. And so there really wasn't any alternative. So the price that they were charging was unregulated. So it was owned by the phone company. So everything the phone company does in telephony is regulated. But the Yellow Pages was an unregulated aspect of their monopoly. And so it represented about 4% of each of the regional Bell operating companies' total revenues, but some 25 or 26% of their profits, their operating margins. So they were just hitting it with huge price increases and customer unfriendly policies because they didn't have any competition. And we came along and created direct, head-on aggressive competition in kind of a, Coke, Pepsi, Hertz Avis, right at them kind of thing. And we were coming in at about half their price point. And amazing service and amazing care and falling all over you and really aggressive marketing campaigns and stuff like that. So that industry was still growing. In the US alone, it was a $15 billion industry that was delivering around $10 billion of profit when we went after it.
These dollar amounts were just huge. We work with a lot of smaller companies in very niche markets. And yeah, something is just generally applicable as businesses with phone numbers. It's a huge market. So if the numbers are big, it's kind of interesting. Can you talk a little bit about swapping out your equity partners? Was that intentional to try to not let people get too comfortable and start having opinions about?
Yes.
Okay, great. Tell me more about that.
It's like guests. It's fun when they show up. You're excited the first day or so. And then after a day or two, you're like, when are they leaving? It's a little like that. Those relationships get stale. What happens is familiarity breeds contempt. They start to think they know your business. In the beginning, they're very respectful. Oh, we want you to run the business and it's really great and we're going to back you and it's terrific. As time goes by and they begin to learn, they begin to meet some of your team and whatever, they start to sit around when you're not there and say, hey, could we do it without Joe? And do we really need this? And, he says that, but is it really another thing? Familiarity starts to creep in and they start to think about it differently. Furthermore, no business is perfect. Sometimes you'll have a misstep in a plan or something like that. We were very fortunate. One of my big mantras is always under promise and over deliver. And so if I thought something was going to do 12, I would tell them it was going to do 9. And as it was unfolding, it was clearly going to do more than 9. I might fess up that it was going to do 10. Then in the end, when it did the 12, I always thought it was going to do it. They were like, wow, you over delivered. We just did it over and over and over again. So once in a while, if it only did 9, everybody got over it in a hurry. So that's how I thought about it. In terms of how I did it, I was always talking to various PE guys about backing us just quietly, not running a process or something like that, just meeting them, building relationships and letting them know that, look, around every 3 years, I bring in new batteries. I know you think you own the business. I'm the owner. You're basically batteries. You get to ride this for about 3 years, make a ton of money, and then I'm going to switch you out. And the best IRR we delivered was 126%, which is a 5.5 timer on their money in 22 months for one of the groups. But a number of others got 3 baggers, 4 baggers. And if you do that, people are waiting in line because there's a lot of money out there.
I was going to say, yeah, how do you talk people into that? I mean, the first one, I guess, especially, but after you start seeing that success, yeah, I would guess that they're lining up.
Well, there's a lot of money out there looking to get deployed. And there are a lot of ideas, a lot of deals out there. It's like the NFL. There's 32 teams and like 14 good quarterbacks. And everybody else is chasing around trying to rehab somebody or find a quarterback. If you're a proven quarterback, particularly with a proven team, it's fairly easy to find your financing. When you're trying to do it the first time, you have to be really careful because you got to set expectations that you can beat. And then you got to get those guys out quickly while it's still a win before it sours. So then you've got this sterling reference, if you will, of somebody that did really well in your investment. Then you start building on that and you do the next one. So anyway, that's probably more than you wanted to know, but that's how I think about it.
Real quick, this episode is brought to you by Delta Systems, which is what Aaron and I do when we're not talking through microphones to you, the people of the internet. We've got a really, really great software team here, and we love to work with cool people on cool projects. So if that sounds like you and you've got a problem or you're in some kind of a jam, go to deltasystems.com, grab the time with us. We can beat up on your problem together, and if there's a fit there, amazing, we'll help you out. So deltasystems.com, grab an appointment, and hey, maybe we can work together. No, I think it's amazing. And so you have this rocket ship that's just going crazy, and you plug in some money that helps you fuel the rocket ship. The rocket ship gets a lot more valuable. You bring in another investor, so they're now paying a premium. They cash out the last person. They give you more money, and now you have more money to grow even further. And so as long as this thing is going up, you can just keep swapping people out, and people are happy to get bought out.
It's way better than what Madoff did because we were actually, it was actually a business. If you're rolling up a category or rolling up an industry, or as you get bigger and you become more efficient, each acquisition that you buy becomes easier and easier as time goes by because your multiple is that you can command on your scale is a premium to the guys that you're acquiring. So you actually make money with each transaction even before you improve the business. And so we were doing an acquisition every 4 to 6 weeks. We were just rocking. We would do like 1 or 2 big platforms a year and a lot of little tuck-ins. And I had a whole machine built to do the tuck-ins. And I was the head of the industry association. And so for me, it was like shooting fish in a barrel. I had relationships with all these people. They would come to our conferences and I'd welcome them, meet the wife, meet the family, meet the kids. And, when time was right, I'd plug them into what we were doing.
And was there some sort of like a process or blueprint for this? I'm imagining probably yes, with doing it on that particular pace. I mean, that seems like a breakneck speed.
Yeah, Andrew Jackson came up with it. He called it Manifest Destiny. Remember that from history class when the US only covered part of the continent? And Manifest Destiny was we were going to roll out, we were going to eventually cover the whole thing. And we had this little tiny strip of land in Long Island, New York. And I had this Manifest Destiny vision that we would eventually turn the entire nation yellow. We would cover the country with Yellowbooks. That was the playbook. And if you get started the right way, if your first couple launches work and your first couple acquisitions work, you start to get momentum, it gets easier. You can attract more and more talent. And we had to innovate a bunch of things. We had to innovate the way we paid people, the way we collected money. There was some very small innovations on 12 fronts that when you added them up, combined with hopefully a little charisma and a little energy we were bringing to it, we got it going. And there were other people that saw us doing it and tried to jump in and do it too. And we lapped them and bought them eventually.
Interesting.
Cool. So I want to ask a leader psychology thing. So 24, 25 years almost, you were working with Yellowbook, scaling it, obviously hugely successful. You described a liquidity event at the end. Presumably some of that made its way to you. I see after that you had a year or two where you were maybe not as busy. What was it like stepping off of the treadmill or did you hit the ground running with a new project? What was it like after the...
Let me just be clear. I didn't sell Yellowbook once. I sold it every 2 or 3 years for that whole 24 years. So each time I would take a little money off the table, roll some more back in, and keep doing it over and over again. So I had liquidity events, I don't know exactly, but 8 or 9 of them over the arc of that time, as well as my team. And that allowed me to cash some team members out, bring in some different talent as we kept moving along. For the most part, I kept the team together, but some people as they got older would cash out. So back to your question, at the end of that run, I did step back for a minute and think about what I was going to do. And I thought I was going to do a lot of angel investing and work with startups and things like that. And I very quickly soured on it, very, very quickly, because I found that I just was wasting an enormous amount of time with people that didn't really have a very fully developed business plan. They didn't really know what they were doing. And they were just sapping onto me because I was a reasonably deep pocket and a reasonably big name. And everybody and his dog was coming to me with these ideas. And I developed some screens to stop the time wasting. And I pretty much said, if it doesn't make 20 million of EBITDA, I won't talk to them. And that brought me into a world where I had financials I could read that were put out by one of the big four accounting firms. I had a law firm that I could actually trust that was doing the contracts and stuff like that. Before, it was just all squishy. And I made one or two angel investments and it didn't work out for me very well at all. It was a time sink and for the most part lost my money. So I got more focused on what my skill set is I'm an operator and I'm an operator at scale. And so while I, in theory, could invest because I have some dough, I was better off deploying my particular skill set because I didn't exactly have the golden touch investing in startups.
So how does that bring you into Thryv?
So I set up a little board advisory practice called Walsh Partners. Very informal, no big effort. I had all these people contacting me. As soon as the press release went out that I'd left this big public company, they just started coming. Some phone calls, but a lot of emails, texts, letters even coming in saying, hey, will you come help us with this situation? And I had just stepped away after a 24-year run. So I really wasn't ready to go be a CEO the next day. So my answer was, well, I'll help you. I'll take a look. So I went on and did some advisor type stuff. And I went in and looked at some situations for people and gave them some advice. And then I started getting into doing strategy work, more deeply getting in and trying to figure it out. So one of the investors that made a ton of money along the Yellowbook run was a PE firm called Verona Sewell Stevenson out of New York City. And they had a investment in a education company. And it was a K-12 education company that helped children learn how to read, learn how to do math, et cetera, particularly intervention stuff where the kids, not necessarily the core curriculum, but the stuff around the edges. And their business was almost entirely on paper. And you can imagine what happened when the iPad got invented, the Common Core is coming along, and they weren't really moving that quickly. And their stock price had gone from $9 or so a share all the way down. It was around $1 a share. And they said, hey, will you go in and help us with this? So I said, sure. So I went in as a board advisor and I went out in the field with the salespeople to see how it all worked. I went into some of their local operating meetings and got to know how the education business worked. And it was very similar to Yellow Pages in that you had this traditional analog print industry that had been around for a really long time that was trying to move to something electronic. So to speed the story up, I basically took over as executive chairman of the company, made some really significant management changes in one morning, elevated a bunch of people into the key positions within the company. And we pivoted really hard to deliver the pedagogical, powerful content that they were doing in paper digitally. We charged $2 or $3 a month subscriptions for kids in a classroom to have access to these interactive games and fun tools that would both teach them, but also capture data on where they were. And then we gave it away. We went out and started giving it away to people. And you could only have one class in like an elementary school could have it. And so Mrs. Johnson would fill out a thing and she'd get it. And then the other teachers all wanted it. The other students all wanted it. The parents were beating the principal up saying, that thing is terrific. And little Cindy has it in her class, but my little Johnny doesn't have it in his. And so teachers sneeze, the information spreads. So what happened was that we'd hear from the principal, can we buy it for some other classrooms? We said, sure, it's a couple dollars a classroom, no big deal. And it would spread up. Next thing you know, the district would want it. Next thing you know, the state wanted it and it would be moving up. And in 6.5 years, we went to 43 countries around the world and we blew this thing up and it was just going. And a giant private equity firm approached us and wanted to buy the company and take it private. It was a public company. They wanted to take it private. So we ran a process to make sure that was the best bid and all that stuff. And it turned out it wasn't. Somebody else came along and topped the bid. And it was taken private for $14.50 a share. Remember, it started at 70 cents a share and went to $14.50 in 6.5 years. So it was a massive transformation from an analog print business that had been around for a long time to a completely, it wasn't called SaaS in education, but to a monthly recurring revenue model. I think they do call it SaaS now, but in those days they did.
How did you manage the expectations and the whole customer and client side of things when you made that hard pivot? I mean, obviously, once you're on the other side of it and people see the benefit, it becomes easier to market. But how did you handle that transition? Did you see a lot of churn? Was there a lot of resistance to it initially? Or was it something that was pretty smooth? You had planned through the transition?
No, nothing's ever that smooth. It's always bumpy. And there's different constituents you have to manage different ways. So investors had already kind of given up on the company. So they heard somebody take over with a crisp, clear plan. and a track record of success. So the stock started moving up as soon as I started talking to them. And I said, look, we're also going to get control of the cost side of this business so that we're going to be really responsible as we do this. And we started growing the EBITDA line and reducing debt to EBITDA ratio, which took some pressure off the share price, and the share price started moving. So they were happy. The employees were excited about the idea that the audience for what they did for this great material that they created was shrinking because they were selling less and less of it each year. And they had missed plan the prior 5 years. So picture an employee base that hadn't gotten a bonus in 5 years and had just missed and missed and missed. I basically had a big webcast with everybody. And I said, look, it's not your fault. You guys do incredible work. When I come to the results meetings and I, meet with the academic officers and look at what we're doing, I feel like I want to chop a cord of wood and run 5 miles when I come out of there. It's so exciting what you do. Only the business is not experiencing success. And the reason for that is here in Dallas at headquarters. You were just being given the wrong playbooks, the wrong priorities, the wrong spending. That stops right now. You guys are going to have a whole lot more input on what we're going to do. And I'm basically going to just guide this a little bit and get it back on track. And so they were pretty excited about that and pretty excited that I was showing up everywhere and listening to them. I was out in the field with the reps. I was going to all their conferences and I'm just listening for hours to people. And it's where I figured out what to do. I had no background in education. And by the way, I don't have a college degree. These people I was managing had double PhDs, all kinds of academic credentials. I just knew how to get people to buy stuff and where the market was going. And they did it all. I just sort of got the investors on side, got the employees all moving in one direction, and then I sold a few of their businesses and made some small acquisitions and found great people that were already there and then just gave them the leash and the runway to get it going in the right direction. So it was really cool. It was a really fun experience. And you can imagine the investment group that brought me in when they got the delisting letter from NASDAQ and the shares were 70 cents a share that sold it for $14.50 a share a few years later. They were really, really happy.
I'll bet.
That was fun.
No, that's an amazing intervention. And so it seems like you basically just kind of set the North Star as to where things are moving in terms of you saw the business landscape changing and where this business needed to be. You put the right people in leadership roles and then got everyone rowing the right direction. That was the big moves that you made. Is that right?
It is. And I never committed more than 50% of my time to it. So I was still doing other things the whole time. It allowed me to kind of focus on the big stuff. And I've found over the years that work expands to fill the time allotted. I mean, if you have 20 hours a day, it'll chew up 20 hours a day. But if you say, no, I'm going to give this thing about 10 days a month and that's it. And I'm going to work on other stuff the other times. So I have to raise my floor. I have to raise the bar, focus on the big stuff, get the right butts in the right seats, make sure the motivations and the incentives and stuff are clear, and make sure investor expectations are right, and then inspect what I expect. You're able to drive the thing. And I was in Dallas a lot at the time because that's where the company was headquartered. And the guy that ran the old telephone company, Yellow Pages, that I had competed with in the past was headquartered at the DFW airport. He said, will you come around and see me next time you come to Dallas? So I did. And he springs his chairman on me. It's the CEO and the chairman at this big, long mahogany table in this 500,000 square foot, 7-building complex. There's just money falling off the walls onto the floor and potted plants everywhere and just reeks of opulence. I was an entrepreneur. And they said, we want you to come run this place. I said, no, that's not. Is there anything else you want? So they said, well, we see on your little website that you do strategy work. Would you help us think of a strategy? So we agreed to a deal for them to help me do that. And then basically I came back to them after a study period and I said, look, less people are going to use Yellow Pages in the future. And they said, yeah, we know that. And I said, okay, good. And your online Yellow Pages, yellowpages.com and Super Pages, while they're good, they're not going to out Google. You're not going to win there. Google's going to win. Out Googling Google, draw a line through that. Don't spend any money on that. Don't spend any ergs, any time. Can't out Google. You also can't out Facebook. So don't go down that avenue either. And they said, well, what does that leave us? And I said, your small business customers don't even know about the cloud yet. This is 2014, but they will. Like I just signed a contract for Cambium to put a bunch of our computing up into the cloud. Big companies were doing this, but it hadn't trickle down yet to smaller businesses. And I said to them, look, I'm going to forecast for you as day follows night. that little businesses will follow big ones into this whole cloud revolution. And that market will be much bigger than enterprise is because there's so many of them. And it's an imperfect market. It's hard to get to them. So there'll be a lot of money to be made there. You currently have hundreds and hundreds of thousands of small business customers. That will be the answer for them over the next decade or 15 years or whatever. And you could provide it and you could deliver. You have a trusted relationship with them. That should be the future of this business. And the board came back to me and said, that's the best idea we've ever heard. We just can't believe how clear that is. And we're certain that that's the right idea, but we're positive that our current management team can't do it. We want you to do it. So you're like the dog that chases the car and then catches it. It's not really what you wanted to have happen.
I don't know what to do with this now.
Yeah. So long story short, they made me an offer that I couldn't refuse. So I basically took my whole Walsh Partners team, 8 or 9 of us, to join the first day all together. And we replaced the other management team. It's about 5,000 employee company, 2.1 billion of revenue, making about 700 million of EBITDA, but shrinking really fast. We took it on and breathed some entrepreneurial energy into it, streamlined the cost structure, got everybody focused on this new mission, and started better managing the old business so that it would last longer. And believe it or not, we still publish Yellow Pages directories all over the world today, only for a few more years, but we still do. And it's produced $3.2 billion of cash since I took over 12 years ago, 11 and a half years ago.
Amazing.
Yeah. So we still should get eventually to talking about software. I don't think your listeners care about PhoneWorks very much. They might be interested in these business stories.
I was about to say, you'd be surprised on the business side of things because it is very interesting. And it's something that we don't really get to get into nuts and bolts of very often. So it's really cool to get to talk in those terms.
Well, I don't know that many public company CEOs come on your podcast and tell you about all this stuff that they do.
I think you probably are our first publicly traded company CEO.
There you go. Well, I'm honored. I'm breaking new ground. Hey, other guys, come on behind me. These guys are nice.
We hope that you start a stampede, and what a capstone or highlight for your career to finally be on SaaS That App. I mean,
I was just thinking that. What did we do? How did we do it? Well, the first thing we did was we hacked together a solution to take out and kind of prove our concept. And it was kind of an all-in-one business management software, CRM-y kind of thing. And it worked really well. And we altered and refined it as time went by. In the meantime, though, we began focusing on what our real true North Star is, and that's linking buyers and sellers together. That's what the Yellow Pages always did back in the day. That's what we were known for. And so we developed this thing we call Marketing Center, and it helps small businesses grow, helps them grow efficiently. 100 years ago, John Wanamaker had a very famous quote. He said, "I know that half of all my advertising is wasted. I just don't know which half." You guys have heard that quote, right? Well, we have a tool that allows a small business to know with detail exactly how everything that they're doing is working, both analog and digital, track it all the way down to the cost per sale and what their return was. And let me give you some quick examples. Let's say you have a roofing contractor and he's doing a roof at 123 Maple Street. He often will put a sign in front of it that says Fred's Roofing. Well, we'd put a phone number on there that's a coded phone number. It goes right into the database. And if he gets 5 calls over the course of the time he's doing that job, we track whether they converted to a sale. And if they did, what revenue was associated with it. And at the end of the quarter or year, we can show them, look, your yard signs did this, your truck sign did that. The ad you put in the church newspaper that you thought you were throwing money away, you actually got 4 jobs out of the last year out of that one. And then your Google search campaign did this. Your social did this. You got this much from Instagram, this much from Facebook. We can take them through everything that they're doing so they can figure out what should they lean into that's really working and what isn't. And then because we're Thryv, because we're a pretty big plugged in company, we've got this big network of directories that we own and control. And we're partnered with people like Yelp and Nextdoor and whatever. So you can reach all this big audience. And then we run tens of thousands of search campaigns and social campaigns for businesses all over the world. We've got all the tech and all the data and all the AI helping to do it better. And so if you think you want to try that stuff, there's like a spigot you can turn on top of this thing and use those aspects too, and then measure whether they work. So we really help a small business grow efficiently.
And this is all on platform, all of those growth metrics, all the reporting.
Everything's in one platform. And it's getting better by the hour because we've rewritten the thing from the studs up with AI now, so that each piece of it has a brain and is helping you do it better and better. We also made a key acquisition a little over a year ago. We bought a software company out in Arizona, some of your listeners will know it from the past as Infusionsoft. It was called Keep. It had been rebranded when we bought it. They were really good at email marketing. They were kind of HubSpot before HubSpot. And they were really good at helping like online marketers market things and so on. Really good at converting and bottom of the funnel work, but they weren't any good at the top of the funnel. And you can be as good as you want at the bottom of the funnel. People want the top of the funnel. And so we put those two pieces together now, and we've brought the Keep capabilities into Marketing Center. So we have lightning in a bottle now. It's very exciting. We call it like kind of market, sell, grow. So help you have people find you in the market piece, sell, convert them so they actually buy and all the facilitate the elements of buying. And the grow part is stay with those buyers and make sure that they come back. Make sure you're staying in touch with them with drip campaigns, whether it's through text or email or other techniques that you can use. And it's all done with automations. So you don't, as a business owner, have to remember to send them a happy birthday. It's doing it. It's doing all that stuff.
Yeah, I'm curious, in your last iteration, you're on the AI side of things, and that's growing. And you talked about that, but you said you had kind of rewritten this thing 4 or 5 times over the course of its life. I'm curious about that last step.
Like everybody listening has done, if they've got tech, you're constantly rewriting it.
It's got a shelf life, and there's technical debt that builds up, and the ones that really survive address that technical debt along the way. They don't wait until it's this just albatross that they have to chuck it all and redo it completely. That's why I'm curious about these iterations. Were they at meaningful enough points that you weren't having to drag along a lot of technical debt? And particularly this last step into AI, how did you make that step from what presumably didn't necessarily have AI in it to something that is a bit more governed by AI?
You know, a lot of times when you work in a big, complicated ecosystem, you have plugins that you use. There'll be a plugin that's just like an answer. It's way better than what you had before. And so you'll write to incorporate that plugin. And then a little time goes by and that plugin falls out of favor and there's a better version, either because they used your contract to go finance or sell themselves and get rich, and then they're not paying attention to it anymore, or Intuit buys it, and that's where companies go to die. It goes and dies, or something like that. You guys have probably seen that, where big companies buy something and then it just becomes crap because the owners leave and nobody cares for it anymore. And so it just falls in disrepair. So for us, it's an iterative dynamic process where we have a vision for what we want to deliver. And we're either writing ourselves or bringing pieces in. And then you're swapping them out as on the fly all the time because there's just better stuff. Also, people get greedy. Sometimes people get a contract with you. They come back for renewal and they're like, let's talk. And they're like, we shouldn't talk. No, we have to talk. Then you end up having to swap them out. But yeah, we've been rewriting it, and rewriting it is getting easier. Refactoring code's getting easier. Everything's getting easier. We're going faster and faster. It's really exciting and a little scary at the same time because you worry, is there somebody who's better at this than us? Because we know we're so much faster than we were. Is there somebody that's even faster out there? But we have an advantage that's hard for somebody else to scale. We still have 250,000 customers. And even if a guy's smarter than me and he's working a few hours a day longer than me, it's hard to overcome 250,000 customers and 3,000 committed employees, that are out there doing their thing. So I'm hoping that holds the hordes off for a while anyway.
It seems like there'd have to be a compelling reason to take you guys on. So you'd have to be missing the mark somewhere for someone to get excited about entering that space. Maybe not, but I'd always advise against people jumping in and trying to compete directly with a giant in the space unless the giant has a terrible product. There's not like some key differentiator that like your software does something better or is more useful or something.
I wouldn't say that we're giant. I mean, a giant is like Intuit or Salesforce. I mean, we're just good enough size to kind of have a little bite behind us.
To me, it's big. I work with very small businesses usually. So when I say giant, I mean,
relatively speaking.
For Daniel and I to start a new company at 2 people, you're big compared to that.
Justin, I think it's important how you think of yourself. We have 2,850 employees. I think of myself as a small business. And I think of us as wicked nimble. And we can turn in days or a week or two on a dime and go in a different direction if we need to. And a part of that's a mindset. I had that mindset when I was running a 16,500 employee company too. I thought of us as lean and nimble. I think it starts with how you think about it.
Yeah, I think that makes sense. They probably actually were under your leadership and with you having that vision and valuing that. And if that's how you see yourself, I imagine you take bureaucratic processes and delays and barriers out of the way. You bulldoze that stuff so you can be nimble and you can turn things around quickly.
We have recognition awards in the company for people who can just rip a layer out or rip a process out or stop a report that's been running for years or something.
I love it.
And you get paid a lot for it. And we do a webcast every month. We bring you on the webcast. How'd you do it? And she's like, well, I thought AI could do this. Why do we have to do that? And we'll shower the person with money and give them lots of recognition. Napoleon said, "Give me a trunk full of medals and I'll conquer all of Europe." It's amazing what you can do with recognition if you put people's name up in lights and help them get some of what they want that moment in the sun. And it's fun to do. I love doing that.
Yeah, it's one of my things I love most about my job is when I get to send a happy Slack message or recognize someone on a company call for awesome work, and someone on my team has done something amazing, and I get to highlight it in front of everybody and say that it's awesome. Like, it's a fun part of working with a great team. I love it.
It is. And it's so basic. And I'll just quickly cover this in case you've got some maybe less experienced managers out there on the call. But, it's really, really simple. But you never, ever criticize somebody in a public forum or in front of people. You have a word on the side, but you praise them when as many people as possible can hear it and see it. It's a really simple rule. You never criticize by email, voicemail, text, Slack, any of that. It's always one-to-one in a real conversation. You can praise them any way you want. You can skywrite it if you want, but never criticize anyway. And I see even pretty bright people, pretty mature people get that wrong, and they make people hate them. It's just too easy to get that right. So a little management note for your listener.
I think it's absolute gold. As a leader, all failures are your responsibility and all wins belong to the team. And I think that's in a similar vein, but same thing.
Perfectly said. But just interpersonally, people will follow you anywhere if you, make sure they're well paid and make sure that they believe in the mission and you're giving them credit. But will you criticize them in front of people? They'll just sharpen knives for you at night. You never want to do that. So anyway, I guess where I was wanting to go in terms of your SaaS That App kind of conversation is that sometimes the product that you really are seeing that's taking you to the promised land won't take you all the way there. And so our all-in-one business management platform is still very good. We still have tens of thousands of customers on it and using it. We're still innovating it, improving it, and we're still selling more of it. But all the heat and light is going to this marketing platform because it's so darn good and it plugs in so easily. You don't have to have a root canal to put it in place. To change out your whole CRM is like, oh my gosh, is that really something I'm willing to do? I think remaining flexible and continuing to innovate within your business and realize that one product isn't necessarily going to take you all the way there. You've got to keep thinking about where's this market going? What are competitors just rendering worthless? Not worthless, but that's kind of what happened to our original product is it just attracted so much competition. And there were so many people with point solutions online that sounded like it, that were way cheaper, that were maybe solutions coming in from overseas or whatever. There's not really a company behind it, but it starts starching your ability to hold margin and make money. And so you have to figure out what can we do uniquely to really stand out. By the way, it's hard at hundreds of millions of ARR to do an air-to-air refueling while you're flying. It's not that easy to do.
Oh my gosh, yes.
We're a public company. And as a public company, if you even have a blip in your metrics, they think you're no good at all.
But Joe, I want to go back to something that you had said just a little bit earlier about, how fast things are moving now, especially with the new platform. You've got AI on there. Things are getting faster and faster, both in the marketplace, but also in your platform and your technology. I'm curious, is that something that you or a group of someone's in your organization keep an eye on and keep a reins on? Or is that something where you just kind of hold loose reins and you let the smart people do their thing?
Closer to the latter. I think we're more challenging and cheerleading and pushing and questioning. Do we have to do that whole 9 steps still? Like in this new paradigm, could we just jump over that and do it in 2 steps? And then smart guys listen, they go, I actually could. There's a way I could take an MCP, plug it into an API, and I could query it. And next thing you know, the guy comes back to you 3 days later and says, Eureka, I found a way. What you were asking about, I think I can do it. And then you give them some money to make a little pilot or whatever, and then you start trying to build it into something that you could actually ship. So I'm more of a cheerleader, challenger guy. We have a lot of smart people that are really close to the subject matter of niche, that the ones that are actually bringing that innovation sometimes. Sometimes I'll just ask the question, couldn't we do it this way? I may not even know all the steps underneath of it. And they'll say, oh, no, we can never do that. And say, well, do me a favor, think about it. Sometimes they come back and go, we thought about it, we can. Or we can do part of it. We can do the first half of it.
I think that balance is so incredibly important. I mean, you need the people who are steeped enough in the industry, in the vertical, to know what the market actually is, what the customer or client actually needs. But then you also need that fresh set of eyes and ears, somebody that doesn't necessarily know, but can ask good questions or ask questions at all and feel comfortable of sitting in the middle of that question.
Yeah.
Yeah, we had Jonathan from ChooseFI on a few episodes back, but he had a thing that he said, which was WIBSIF, which is wouldn't it be cool if, and just being free to be curious and ask the question and kind of live with it. And WIBSIF, wouldn't it be cool if, and then maybe it's like, oh, that can't be done. Like, we'll sit with it for a minute. What part of it could be done, or what makes this a hard problem? Can we solve an easier problem? I love all that stuff.
You mind if I borrow that? I like that a lot. That's really good.
Attribution to Jonathan Mendonza from ChooseFI. Yeah, please do. I loved it when he said it on the podcast. I thought it was great. Yeah.
Perfect. Well, that's what I'm trying to do and the team is trying to do at Thryv is we're trying to help small businesses grow more efficiently. We're trying to do it with our market sell grow platform and making some pretty good headway doing it.
What are the characteristics of businesses that are a great fit for Thryv? Like who's going to get the most value out of being on the platform?
I think our best customers are kind of like 5 to 25 employee, pretty small businesses. These are not typically hundreds of employee businesses. At that point, they're using Salesforce or HubSpot or some big expensive solution. And they're better. They just do more stuff than ours does. Ours is $400, $500, $600 a month. It's not even close. I spend that an hour on Salesforce.com and HubSpot.
Yeah.
So it's purpose-built for that smaller business. I would say probably up to like 80 or 100 employees. You could probably use it pretty well. We do have an offering that startup type smaller businesses could use. We have an ICP, an ideal client profile we call Dreamers. And that's somebody that's starting a business or maybe has less than $500,000 of annual revenue, kind of their hobby turned business, or it's maybe 2 people working in a small business. And we have an offering for them. That's not really where we spend a lot of our sales and marketing time, but we have a lot of those customers who come in sort of a more of a self-serve way at the lower end. Because we came from the Yellow Pages business way back when, we have a ton of service-based businesses. So think about all the home services, personal services, car services, a lot of professionals like dentists and doctors and lawyers and all those kinds of people that rely on a steady flow of customers coming in. We don't have a lot of high-end dining or retail or esoteric things like travel or something like that. Those are their own categories, mostly online. But those are a lot of the businesses that we have.
So you've been through this several times yourself in your own path through your career. And then certainly now, particularly with Thryv, you've seen a lot of businesses through difficult times or challenging decisions or a transformative or tough period. So just taking a step back, 10,000 foot view sort of a thing, over the course of your career and also what you've seen in others, what would you say to the audience about things that you found to be harder in those moments than easier? Is it something that's technology based? Was it more often than not the organizational design? Is it the customer migration process, internal politics? I mean, how would you categorize usually where the hard stuff really falls?
I think so much of success in business is mindset. It's the way you approach it. It's the questions that you ask. Like that guy with the wouldn't it be cool if question. So it's just a powerful, great question. The brightest, best leaders, entrepreneurs, executives that I know, they just ask really good questions. And they're not like, oh, woe is me. Why did this happen? They're like, okay, how can I make lemonade out of this big pile of lemons I just got? You can knock them down and they just pop right back up. Shove them down 5 times. They stand up the 6th time and go, okay, let's go. And they're not even bothered. They're just ready to go again. And those kind of people are the ones that succeed when everything within you tells you to quit, when your customers tell you to quit, when your family says, what are you doing that thing for? At that moment, when you stick to your original resolve and you just ask the question one more time, surely there's a way we can do this, you break through and you find that way through. And that's been my experience in my life. So many times when people around me thought, oh, it's never going to work, we're never going to make it. And I'm like, I can't even believe you could possibly say that. How can you even think that way? There's 50 ways this could work. We just haven't found the one yet. Let's keep going. And the next thing you know, the next month, you land a giant customer or you sign somebody or something happens and the whole world looks different. Winston Churchill said during the war, you got to just keep buggering on. You just got to keep buggering on. And even when you're not sure, that mindset does so much. And it attracts people to you that maybe don't have it themselves, that want to get behind somebody like that, want to be around somebody like that can do that. And so much of business is people issues. And if you start with the right mindset, then half of them are already solved. Stuff we talked about earlier, like how you treat people interpersonally. And then the path you blaze and the vision that you can transmit to them. Selling is just a transference of belief. If I believe it and I can convey it to you, even if I'm a bit inarticulate, if I can somehow get it over to you, then you believe it, you feel that way too, off we go. And we start building a business together. And as I said, for me, I had one vision of where we were going, and it's changed over time. And the team are still behind me. We're still going, even after the new one now, because the market moved over a 12-year arc. The original goal ended up being wrong over time. And so we've altered it a little bit. Not without some setbacks, by the way. We missed a couple of numbers in the process. But, I'd love to find a story that's just straight up with no down segments. I haven't found that one yet.
Let me know if you ever come across one.
The story I told you about my first business, the only reason that story sounded so smooth is that we had the benefit of time. We were looking way back in time over a big arc of time. While it was going on, it was ugly. I mean, there were all kinds of setbacks and disappointments and problems. Looking back, it seems very smooth now.
Well, we're coming into the end of our time here, Joe. I'm going to steal, it's my favorite question. So what should we have asked you about that we didn't? Or what wisdom did you have to give that we didn't get after at all?
I don't know if I have a lot of wisdom, but I guess I'll talk about this. The world right now is questioning the value of apps and SaaS and software and whatever. And I'm so inside the tornado. I'm right in the middle of it. I guess you guys are too. I just believe it's all going to be melding together. I don't know of any software out there or any SaaS operator that's not bringing AI to bear on everything they do. I don't have to go create my own large language model to benefit from it. I mean, it can all come together. And I suppose you could be asleep at the switch. I mentioned an aforementioned giant company that starts with an I earlier that tends not to pay a lot of attention to their businesses. But, assuming you actually own it and you're in it and you care, I just can't imagine you could get passed by AI. Now, could some AI native guy start something that's just AI? Yeah, but you should have some incumbency in customer intimacy, relationships with your employees and theirs, billing relationships and stuff like that. You should be able to leverage. And you might have to alter your pricing model, not do seats, but do outcomes. And I would say if you're not innovating that stuff, you're going to get your butt kicked. So as to this question, which you didn't ask me, but you said, what's the last thing we could talk about? This whole, is AI going to just obviate everything that we all do? I just think it's all coming together. And the better operators will leverage all the advantages they have and use AI and do well. It probably will starch the margin out of certain edge cases and so on. But I think if you're close to your market, close to what's possible, you can just be out innovating, and stuff that maybe was an important product 5 years ago, price point might come down on that, or it may not make as much margin, but you'll be doing the next thing. So I don't really fear it at all. I'm pretty fired up about it.
I'm fired up about it too. We're aligned on that. I think that we're going to have different problems to solve. AI is going to take the stuff that used to be hard and make it easy, but it's going to make a lot of new things hard. And people are going to have new leaders emerge who are good at the things that are now hard in the new landscape. And I'm jazzed to see what those things are and make sure that our team is on top of it too and doing a good job for our customers, being good advisors.
Yeah. Aaron and Dustin, you guys are fun to talk to. Thanks for having me on.
We appreciate it. I have like a laundry list of things I've been making notes that I want to ask you about, but we're flat out of time. So that's super unfortunate for us, but so glad to have you on. We've been talking to Joe Walsh, Chairman and CEO of Thryv. Joe, what is the best way for people to get a hold of you?
joe.walsh@thryv.com.
There we go. Well, thanks so much for coming on. It was super, super awesome to get to meet you.
That's how you got a hold of me, Aaron. Come on.
I know how I did. I just want to make sure that the right people are getting to you the way you want them to. That's my mission here.
Thank you, guys. Good talking with you.
You bet, Joe. Justin, thanks as always. And thanks everyone for listening in. Hit that subscribe button and give us a shout or a comment. Let us know if you got any suggestions or ideas for show topics, or if you just have a question. Justin is hot on the Ask an Engineer. So let us know what you're thinking, and we'll catch everybody next time on SaaS That App. Thanks for cruising along with us on SaaS That App. We hope you grabbed some insights that were inspiring, actionable, or at least entertaining.
If you enjoyed the show, don't forget to subscribe and leave a review.
Until next time, keep building, keep growing, and keep those apps sassy.